crisis arrived during a transformative period for trade finance, largely through digitization and the emergence of new platforms. This is an area where we see an intense movement toward innovative technologies and digitization. For an industry that has been based on paper for centuries, the embrace of technology hasn't been instigated by the pandemic, but it has been accelerated. While the procurement supercycle at banks, regulators, border agencies, trade bodies, corporates, and fintechs must work together to apply digital innovation and drive efficiencies. In fact, fintechs are now leading the product innovation, heralded by rampant digitization. The digitization of trade finance not only makes it easier to satisfy administrative requirements, but also enhances internal risk management systems. It will only serve to increase the size of the trade financing market. We have a very special guest with us today to show how fintechs are leading the product innovation and digitization in the trade finance space and how digital transformation of this space will lead to the overhaul of the entire financial services sector. Please welcome Anil Gopinath, Chief Technology Officer, Drip Capital, to share his thoughts on this topic. A very warm welcome to you, Anil.
Thank you. Thank you very much. Glad to be here.
Same here. So, Anil, in context to our topic, as everyone knows that like low working capital is a major challenge that plagues many businesses in India. How is digital trade finance from various fintech organizations filling this gap?
Yeah, this is a important problem, and if you look at the worldwide, according to published reports, there's like a $3 trillion gap in trade finance today. And if you look at the MSMEs, and this is primarily contributed to MSMEs worldwide, and this is attributed to them. And if you look at the MSMEs in India, MSMEs contribute to about 50% of India's exports. So addressing this financial gap is very important for the success of global trade, and especially in the Indian context as well. And most of these businesses lack access to financing. And one of the reasons why there's such a large gap is because the traditional lenders, the banks, they require collateral, and MSMEs are not able to furnish them, or probably they have some collateral which they have given to the banks. And when there are dynamic changes or new demands for financing, they are not able to get additional financing from banks, and as a result, there's a continuous gap in financing. And this is where companies like fintech companies like us come into picture. Where we differ from the banks is that we are able to analyze risk aspects of these transactions from the MSMEs, and then be able to provide financing to them in a very fast manner. We leverage a lot of technology to make this happen, and so we are able to make these decisions in a fast manner. So so there is a digital gap, and I think technology companies, fintech companies like us, who are leveraging new mechanisms, can definitely step in and fill this gap.
Yeah. So how does digital trade finance work, and why is it crucial in today's context?
Yeah, so I'll just try to summarize that, and it's a fairly complex process, but primarily, the crux of it is when there is a transaction that's happening, or when there's a request for financing, we have to analyze the risk of that transaction. Right? That is where that's the biggest challenge, and that's where with MSMEs, you don't have like the credit scores and great collateral, and so this. New mechanisms and new techniques that you need to do and apply technology to understand the risk of the transaction and then make a decision. And so, in order to do this, we gather a lot of data about the transaction, about the parties in play, and then we are able to analyze the risk of the transaction. The risk is actually can be categorized into three aspects, and this is kind of crux of the whole trade financing, digital trade financing, and the types of risks that we have to analyze, or any financial system has to analyze, is the commercial risk. If there's a dispute between two parties, there can also be the financial risk. Fundamentally, the companies are not able to pay back if you finance to do the transaction. And also there is a more subtle aspect, which is fraud. And if there's a fraud that happens, then there's no way that we can recover the money, or any party can recover the money, right? So these things are in play all the time. And the challenge is to look at data and make the right decision and do it fast. And for companies like Drip, we have to do this at scale. So it's not only that we have to do this for Indian customers, we have to do it for customers worldwide. And so that's how that's like a gist of how the trade finance works. We look at the data, analyze risk, and then come up with a recommendation on the financial terms.
So what is the criteria for analyzing that risk?
Right. So the criteria is all, like I said, it's based on the data that we gather. So first we look at the like if it's an invoice that is being submitted, we look at the invoice. We look at the details of the transaction, like what is being transacted. And then we look at if there is, we look at financial information about both the parties to see if there's any financial risk. So we look at these three aspects, right? Like I said, financial aspects. If there's a possibility for commercial dispute, and if there is fraud. And so we look at data from a different sets of resources. There's like hundreds of data points that we get. Some of this data is provided directly by the importers and exporters, the parties in the transaction. Also, we look at third-party data sources. We scrape the internet for a variety of information, bring all of these things together, and then make the decision.
So, as you rightly said, that there is a risk and which has to mitigate it. So, in case something goes wrong, and in case of I would say that still after calculating all kind of risk, and there is a mishap. So, what exactly what is the business model like that? How you cope up with that?
Yeah. So the big thing is not to get to that kind of a crisis, and that's where the whole technology comes in, right? And so our goal is to kind of reduce that, and so our machine learning models are constantly curated to improve that and kind of minimize that from happening. And now there is a possibility that happens, and when that happens, you have to do there's a whole collections organizations in our and there are teams that can go after this. There are contracts in place. When we sign up agreements with them, there are certain aspects that we that we communicate, and certain things that we have as defensive mechanisms. But those are those tend to kick in, or if there is a problem, right? And our the what we strive to do is not to get into that situation. That's like an exceptional case, and it should be probably in an ideal scenario not happening for us. So I wouldn't optimize that and go in detail into that, but but there is a team of people who actually try to salvage something. But from a technology perspective and from a product perspective, our focus is to continuously learn and make sure that the probability of that event happening is very, very, very small.
Yeah. So the reason behind asking that question is, like every bank, nationalized bank, even we can see they have a separate unit for recovery and all. And we in news, we can see of late that there has been complaints been sent to RBI against the fintechs that, okay, the behavior with us was very bad. I mean, we got an extortion kind of a behavior from the fintechs basically. So because of which, RBI has been quite strict with fintech firms with a set of certain regulations and which are a favor, more towards the favor of banks. So how do you see these regulations affecting the digital trade finance business?
Right. So this is a very important aspect, and I think one of the things that we do is constantly communicate with our customers. So in order to not to get to that, like I said earlier, we start the communications process earlier. We kind of we kind of follow the transaction as well using technology through tracking the transactions and things like that, tracking the shipments, and so we are able to constantly communicate and not wait for the last minute for payments and kind of things like that. So coming back to regulations. Um, Regulations are it's a double-edged sword, right? So regulations are required, and it helps kind of level the play, and also, like you said, it's a protective mechanism, right? So our goal is to make sure that we don't get to that to those scenarios. But yeah, so from that perspective, we believe that these things are required. RBI has to step in and come up with these things, but it should be in such a way that it does not crush innovation, right? So what we are trying to do is solve for the best scenario, right? Like we're trying to promote trade, we're trying to help the small businesses and kind of give them timely capital, right? So I think the reforms. I mean, so I think the regulations should ideally not come in the way of innovation. So overall, I would just say that I mean, there should be regulations, and it should be it's something that it should be monitored, and definitely going after customers with and kind of getting money through force is not a good thing. And so there should be some things, but I think our focus is primarily, like I said, on the best case, and trying to innovate and make sure that that does not happen. But I see the point that there has to be regulations, and hopefully that is an area that we are trying our level best with technology to actually not go into the negatives, but actually focus on the positives.
Yeah, the divine side of the technology. Okay, so kind of switching my gears, like coming to the next part of it, like as per the SHM CRISIL report, though banks still dominate the MSME lending book and MSMEs have started exploring digital lending platforms, how do you see digital trade finance taking over bank-driven cash transactions over the next few years?
Yeah. So interestingly, in India, I think there is awareness, but if you go to like rural India, there is still a lot of lack of awareness for alternative sources of funding. Right, people know about banks by default, but they're not aware of like fintech companies like us who are trying to innovate and really help them. So, our marketing and sales organizations are actually going into rural areas and trying to get awareness there. But there is still that gap, and the default source of funding for smaller companies is the banks, and banks are actually now struggling to quantify the risk because they kind of by default work on collateral, right? And so without lack of collateral, without collateral, they are not ready to take the risk. So it is a sad state for the small MSMEs to be in. But if you look at the opportunity, right, like we talked about globally, there's like a $3 trillion gap. And so if you look at the opportunity within India itself, the need for working capital is huge, and especially with all these new economic changes that are happening, there are sometimes even sudden needs for capital. So MSMEs need that sudden financing, which banks are not able to capitalize. So I think the pool is very large. It's not about like fintechs going over and taking over the banks' contributions or anything like that, but I think there is quite a large market, and I think we should focus on empowering the MSMEs, because I mean, financing is just one part of it. They are actually working the factories, making sure that their products are high quality, right? So this financing should be something that's like a slam dunk for them. So I think banks and there's a lot of room for banks and fintech companies to combine together and form strategic partnerships and kind of really help and address this gap. So I wouldn't say that fintechs are trying to encroach into banks, and there's a huge market opportunity here, which I think yeah, that both of banks will always have a stake, because some of the MSMEs go to banks by default, but there's still a huge opportunity for us, companies like fintech companies, to come and innovate and grow the business. And actually, once we start helping these companies, we are actually contributing to larger trade. So this is not a win-lose thing. We are actually causing an expansion to happen. So I think it will benefit everybody.
Yeah. So as you rightly said, that banks, it's next to possible for them to do a collateral-free lending. So, when it comes to fintechs, how crucial is the role of technology in trade finance, and how are you leveraging technologies like artificial intelligence and machine learning to lower the risk of collateral-free lending?
Right. So tech is, like I said, is a core part of what we do. And if you look at going back to the process that I described earlier, we take data from different data sources to come up and analyze the risk, right? So if you look at so DRIP is a international. I mean, like, we are in multiple countries, and so in each country analysis, this process is different. The data sources is different. The way the machine learning models that take the data and provide a result of and quantify the risk and then provide a result. The models themselves are different for different countries. The policies are different, and so this divergence in data and policies and models make it very difficult for like people to do this in a manual way. That's where tech comes in. So we can scale using technology. We can provide the same kind of service to small and medium businesses across different countries, and we are able to do this at a very fast rate. So so providing the same kind of results and the same accuracy of results, analyzing different type of data sources and customizing this for different countries can be very easily done using technology. And so a machine learning model can be customized, retrained, and adapted for each country. For example, when we started off, we started with India. India was our first country where we developed the product. So the first machine learning models and policies were created for India, and then we took it to Mexico and kind of used the learnings from the interactions here, and then applied it to Mexico, and then we were able to come up with a model very quickly and retrain it and make it successful in Mexico. And we're doing the same thing across other countries as well. So I think technology is at the heart of all of this, and this makes it possible for us to provide that financing to SMEs worldwide. There are other aspects to it as well. Now, there is one thing called, one thing is about linking importers and exporters to global supply chains, right? And this is where technology can come in. So the first aspect is the financing aspect, which is important to start a transaction. But the other aspect is connecting these importers and exporters to supply chains, right? So that is also where like open APIs from supply chains, you can have that interact with our platform, and we can actually provide some insights of global supply chains to our importers and exporters in our system as well. So in summary, I would say technology helps make it easier to finance and kind of provide the same quality of finance across multiple countries, and do this at scale.
Yeah, absolutely. So one question, which arises, that when we say, especially in the context of India, and when we talk about MSME, So you said that to mitigate risk, you take data, you use data. So
Yeah,
within MSMEs, is it easy to get data from them? Are they really maintaining those data and sharing it with fintechs like Drip? How
yeah,
is it? Is
yeah.
it a challenge, or how I would say that? How does the overall ecosystem of digital trade finance is promoting digitization among the traders and MSME players?
Yeah, yeah. So MSMEs are realizing the importance of digitization, and right now a lot of import export is done through paper. If you look at whether it's a shipping bill of lading, although a lot of that is becoming digitized, the ecosystem is realizing the need for having digital data. The MSMEs are realizing it because now now if the data is digitized, they can easily provide that data to financial providers. They can provide that to shipping companies. They can provide it to financial. I mean the insurance companies, or even several other people in the ecosystem, right? So the need is becoming clearer, but still there are people who are who are not made that transition yet. And so we provide we use technology to actually make this easier for them. So we take in like paper bill of lading, shipping docs, and then actually help to digitize it, and then use that data for our risk models and things like that. So yeah, so that is so one aspect is MSMEs, being digitized will actually make it easier, but we'll have to innovate, before all of MSMEs have, completely, digitized themselves. So meanwhile, we are providing these alternate technologies, but we also leverage, actively. We participate with other third-party vendors who are already digitized. Like, for example, insurance carriers, are now providing APIs by which you can get data about insurances and what can be insured and things like that. So similarly with shipping companies as well. So we are encouraging, since we are completely digitized and we work with data, we are also asking, we are talking with the ecosystem, asking, can you make your data available via an API? And so that conversation is also kind of helping all these entities to kind of digitize, and it's very clear. And once we have this conversation, it's very clear, both on the part of MSMEs and the partners, that this overall digitization of data is going to help them throughout the process, be it financing, be it shipping, be it even communicating with importers and exporters in a digital way. So yeah, so that so I think we are helping with that, and companies like us are also kind of accelerating that.
Yeah. So though COVID-19 has put it into the fast track mode, earlier MSMEs, I mean, now the kind of scenario is that we no more have the POC kind of stage only. Because people are bound to get into the digitization, I would say digitalization.
Mhm.
And so is it that DRIP is only, supporting the MSMEs which are into some kind of products selling, trading, or is it also including services, the companies which are more towards the services? What kind of support DRIP is providing to the service providers?
Right. So there is a couple of aspects here. I think one, we started off as a financial company, financial services company. So we do have a variety of finance products which are targeted to importers and exporters. That's where we started. And then when we looked at the ecosystem and we understood import and export more, we saw that there's a whole plethora of people engaged and different types of services that are also part of this system. So now we slowly, now our thinking has now evolved from just being a pure play finance company to actually helping kind of bring all these people together and provide different types of services. People who provide different services. We are now building a trade facilitation platform. which is linking all these players together, which can help them to kind of participate and kind of put in their services, service requests, and kind of and form these connections among themselves. So this was traditionally kind of done in an ad hoc manner or by meeting up in conferences and all of that. So these linkages were being done in that manner. But now we are coming up with a platform which where all of these service providers can actually come together, participate, and can do things and kind of build a relationship, and we will actually be an enabler of these different services. So that's a trade facilitation platform that we're working on. And of course, we will continue to innovate and look at financing opportunities as well in these transactions and in other transactions. So our strategy is now to focus on both the financial aspect as well as helping this ecosystem become better.
Yeah, absolutely. So, would you like to name the marquee customers you have when it comes to trade facilitation that you have started with of late?
Yeah, so the trade facilitation is we are right now we are internally testing it, and we are getting ready to launch to a set of customers right now, mostly our internal customers, and we'll be announcing it soon. But if you look back at overall what DRIP has contributed to from a finance perspective, we have done about $3 billion in trade finance globally. In last quarter, just to give you some data points, we grew by about 30% in the first half of 2022. And India actually contributes to about 65% of DRIP's overall business. So we are growing significantly in India. We are also now growing in other countries as well. So our primary focus so far has been finance, but now we are making the change. We're still early in the facilitation part of it. We are now talking to some of the key strategic partners, and so facilitation takes some time to build up. It's there's a lot of players, and so we are building those strategic relationships right now. We're talking to a lot of players. We're building the APIs and the connections. So you'll see some announcements coming up soon, but we're still at the early stages at this point with that.
Sure, sure. So, what are the best practices you would suggest for businesses to leverage technology as an enabler to get easy finance and higher credibility in the market?
So one aspect is this whole thing about clean and green technology, right? This is becoming a big focus because of global warming and variety of other things, right? So any opportunity for the world to come in and change the practices to make it make practices cleaner and greener, we should definitely start working on that. And I think trade, although it is one of our most ancient activities that we do, we still are lacking quite a bit in this space. And I think technology can help to make that shift. And I think that will also bring a lot of credibility for these businesses when they start engaging with other customers worldwide. And there are customers who are now also insisting. Some of them are also insisting because they understand the need for these clean and green aspects. So I think that one thing of embracing technology will definitely help promote that. So the other aspect is with embracing technology is reducing the time for getting things done, right? Like, so this is making things efficient. So whether it is communicating with the partners, bringing in new product innovations to the market, understanding the market itself, right? And so all of these things can be using technology. So the other aspect is people when you look at the entire like end-to-end of a financial of a import-export transaction. You're producing goods, you're putting in warehouse, you're then shipping it, and then goes to end state. There's probably warehouse and go down there. And so if you look at the entire chain of things, having digitization across all of these things makes things efficient. You don't have losses. Like for example, if there's a surplus of goods in a particular godown, you can kind of communicate that across, and then look at other people who are interested. And all of this can be done in a much more efficient way if technology is leveraged. So overall, I think there's several aspects. I think we're just seeing with finance, we're just seeing the first stages of the impact of technology, and we've started innovating it to manage risk. But there's a whole variety of things that we can do when we start looking at the entire end-to-end aspect of a trade transaction, and make each aspect more efficient.
Yeah. So in short, we can say sustainability, speed, agility are few things which we can expect from the technology.
Absolutely. Okay.
Yeah. So please talk about the drip capital footprint globally and in India, and what are the recent business achievements in terms of business expansion, customer acquisition, and revenue growth?
Yeah. So, like I mentioned earlier, we started off primarily in India, and after that, so our expansion is primarily, we are focused very highly in three countries: India, Mexico, and US. And so these are areas where we are like really, going deep and really trying to capture the market. And we also in like 65 plus countries worldwide. We have, so basically we have customers worldwide, and the proportion of customers worldwide is increasing. But so far, so like I mentioned, we've done about $3 billion in trade finance already. And we've seen some very like about 30% plus growth in the first half. We have a good, and we're doing several partnerships as well to reach out to these MSMEs worldwide. So now the strategic shift that we're seeing is moving from, like we understand India market, we are continuing to grow in that market, but we are also seeing a shift to actually capturing other countries, markets in other countries, and also helping people, MSMEs in other countries as well.
So as you talk about reach, especially in the context of India, MSME is huge. So how are you reaching and how are you creating awareness among the MSMEs in India?
Yeah. So we have adopted a few strategies, and this is an ongoing thing. I mean, this is not, we just started with this, and there's a whole lot that we can do here, right? So one of the things that we have done is the outreach program that we have, and so we have within our sales organizations, we've kind of grouped into in kind of sectors. Say, for example, if it's a farming of some type, or if it is yes, cultivation of some type, or it could be like maybe poultry, or things like that. So there are different sectors, and so what we do is we kind of we've engaged a group of people in that particular sector and area. So we then go after MSMEs in that sector and then bring out awareness, and we tell them about success stories of other MSMEs in that particular area. And so we are now creating these targeted focus groups, and then we are able to now kind of show the success stories of other people in that same area, and then kind of when people see actual success stories and relevant data from people in that particular area, they are able to then leverage that and kind of do that. So and so this also creates like cookie cutter kind of platform for us, so that we can say that, okay, these set of practices have worked for people in this particular area. And so this is how, like for example, if you're in agriculture and you're exporting wheat, so all the wheat exporters can kind of use a mechanism that was used by another wheat exporter, maybe in South India. So I think the key aspect is using examples and and just actually going out, into rural areas and kind of spread the word. It's going to take some time, and but we have been in the business for the last 5 6 years, and now have actually built relationships, and now we are making a lot of progress.
So creating communities and influencing people, actually,
Absolutely.
we can put it that way.
Yeah, absolutely. Yeah.
Yeah. So what are your top focus areas over the next 3 5 years? The last question.
Yes, absolutely. So, like I said, technology is still very core to us. And I mean, being the CTO, that's like it's the next 3 4 years are looking very interesting. Kind of have like some big ideas to improve the product that we have, not only focus on the finance side, but also look at the trade facilitation aspect. So if you look at the finance side, just the main aspect of making it easier for people to come in and use the financial products. So innovating in things like intelligent document parsing, document AI, and all of that. Um, Partnering with folks who can actually also provide these capabilities, and then so making it easy for people to digitize, then making it reducing the turnaround time. So innovations on that aspect, really reducing the false positives from a risk perspective, and then being able to scale this out to hundreds of countries, right? So scale will be a big aspect, and innovations of the product to cater to different financial needs of importers and exporters worldwide. So we are creating flexibilities, or we are kind of re-engineering some aspects of our product to make it easier to customize to different countries. So that's one aspect that we are focusing on. And the second big aspect in all the innovation that we'll be doing in the next 2 to 3 years will be this whole trade facilitation platform, and linking this platform to supply chains globally. So there's a lot of aspects that it's probably another 30-minute talk about all the things that we are doing. But to summarize it, I kind of fall into two buckets to make it to innovate in the financing aspects, as well as to use technology to build a platform that makes all the players come together and provide new services. So these are two areas, and all our innovation is kind of focused in these two big buckets.
Absolutely. So what I feel is that to help MSMEs get into digitalization, it's important to support them with some kind of finance so that
Yes.
they can actually get into the digital business transformation.
Absolutely. I think MSMEs are. The other aspect of MSMEs is if you look at the innovations, right? Like MSMEs are driving innovations in their areas,
Yeah.
right? And so for the world to change, you really need to finance them, make sure that they're successful. So I think MSMEs and focusing on MSMEs is critical for, I would say, the future of the world.
All right. Thank you so much, Anil. Thank you for joining us today.
For more updates from CXOTV, please like and subscribe to our channel.